Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us live from the MarketSite studio in Times Square, New York City, we have Seth Wunder, Chief Investment Officer at Acorns. Seth, it is great to see you finally in person in studio. Welcome to Trade Talks.
Yeah, thanks for having me.
Let's talk about how important personal financial security is right now. Gas is increasing, doubled. Housing, food costs, they've increased so much just in the past year. So my question to you is, how do I prioritize between budgeting, paying my bills, and investing?
Yeah, I mean, we all feel that, right? The gas prices particularly, and then grocery prices, the everyday person struggles with seeing their day-to-day costs go up. I think the most important thing for people to remember is to take what they have in their monthly savings and think about it as like a percentage. So if you had $200 or $500 at the end of your month, maybe you put half of that into savings and investings before. Well, if you have a little bit less today because those inflationary costs are hurting your monthly excess, still take about half, or whatever that percentage was for you or for that person that worked for them. I think that's the way to sort of normalize the prices going up and not giving up on the basics, which is the important thing of even little bits over time make a big difference for people.
Let's talk about the longer term investor, keeping investors invested even during volatile markets. What does that mean for the long term? Does it pay to panic and pull out when things are volatile?
Yeah, it's a good question. Like, it never pays to panic. So like, if we just step back, have a sense of prudence, think about it analytically. I mean, we've been here before, although it's rare. So if you look at the market so far this year, we're going to close Q2 in the first half of this year down about 20% in the broader market. That's happened 4 times in history. All 4 times in history, going back about 100 years, have had very strong returns in the back half of the year. And if you look at the top 10, there's similar types of positive reactions. What's really important for people to remember is that every downturn in the history of the stock market has ended with an upturn. And so if you sell, you do crystallize, or you do make your losses permanent. By staying in the market and continuing to invest through a downturn is the best way to take advantage of when that upturn eventually comes back for us.
Yeah, I mean, this could be a generational opportunity for younger investors with the drop that we've seen since the COVID-19 highs, the highs that we made through the past couple of years. So what types of investments are appropriate for younger investors right now?
Okay, so I'm glad you asked it from that perspective. So investments, when people are younger, they normally say, oh, I'm in my 20s or my 30s, I have plenty of time to invest in the market. And that's true. But I don't think synonymous with that is put all your eggs in one basket. And I think we've seen people learn the lesson, maybe even somewhat the hard way, that investing in stocks or options or singular cryptos in too much size can be painful for their investment experience. Even when you're young, the more important thing to think about is really about portfolio construction. And so to think about overall, you want a sense of diversification. The younger you are, you want more equities or stock market exposure. And so if you think about it from more of a holistic strategy as opposed to a singular investment, you'll probably set yourself up for better long-term success than just focusing on one investment and what's the next trade, if you will.
Yeah, I mean, it makes complete sense, because when we're thinking about valuations going into the end of 2021, does it make sense to buy at these levels? Well, the downturn that we've seen, you could get some great generational opportunities in your 401k because you're investing now, and over the long term, you are going to get that appreciation in shares that you're buying today.
It's very hard for people to separate the emotion of money to how they think about other things in their life when something is, let's just say, on sale, right? And so things end up on sale in their daily life, and they say, oh, I'll buy 2 or I'll buy 3 of those. But when the stock market goes on sale, they're more tepid with how to think about that approach. But it's the same mindset, right? The S&P 500 or a broader index of companies has come down this year, and that multi-year compounded opportunity of compound interest or compound returns, the numbers become favorable to people when they buy when the market sells off.
All right, Seth, we appreciate the insight as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.